really speaking, why would one want to, as an Indian investor, invest outside India? And of course, everyone's had, all of us as local investors have over a very long period of time had this huge home bias where, most of our assets would have been invested primarily, if not 100%, in India. And really the benefits of international diversification. So where you're able to different markets do well at different points in time. There tends to be rotation between markets, and if you're only going to focus on one of them, then it's possible you're missing out on some upside or return potential which is there in those other markets. And at the same time, really, there'll be a lot of themes which, as a local investor in India, you don't have access to. The most notable ones which come to mind are really the US market-led, big tech companies, or I would say any of the new industries like electric vehicles, etc., which come to mind. And when we, as bottom-up portfolio managers into equities, have explored stocks overseas for the local mutual fund portfolios, we realize that even it's not just the US. There are opportunities probably in markets like Japan. There are very different opportunities. Even a market like Europe, for example, has had very high quality companies, either household names with the consumer products or mega industrial type companies which are out there, which could be at attractive valuations. The lower correlation that investing overseas has to Indian markets, that would really bring down the overall risk of a portfolio, and potentially offer also different kind of return potential to an investor. As you know, the currency depreciation, so over long periods of time, Indian rupee has kind of depreciated by a roughly 3 to 5% annual rate in the past. Going forward, will that continue at exactly the same pace? That's probably anyone's guess. But suffice to say, given inflation differentials, rate differentials, it is likely that Indian currency continues to depreciate. And when you're investing in overseas assets, potentially hard currency denominated assets like US stocks or European stocks or Japanese stocks, you have the benefit also of that currency depreciation, at the same time diversifying across kind of currencies as well. In addition, Indians these days might have liabilities which are in foreign currency. For example, you may plan to or may have already sent your kids overseas to study, right? And you want to have some assets out there, globally, not just in India, because every year that the rupee depreciates, your education in US dollar terms gets more expensive for you. At the same time, when you're investing overseas, there's a plethora of opportunities. So not just at the bottom up, say stock level, but also in terms of products and strategies which become available to you. And maybe those themes are something, or those products are something that's really not available in the Indian context. So just coming to my stuff that comes to mind is, so we have a quant fund out right now, right, as an NFO, and probably that space is just so small in India. You're not kind of getting, a real exposure to high quality multi-factor investing, for example, just yet. Uh, while we are looking to change that, but I think those things are already well proven in the overseas context. So I would say that's just a brief on why one should really, as an Indian, look to investing overseas as well.